Coming up today, stocks trade mixed. Can the rotation continue? Tesla misses expectations and trades sharply lower. Along with earnings from Alphabet, oil prices pull back, Ethereum ETFs start trading on the market, and one of the largest coups in US politics has just taken place. Let's go, guys. Welcome back, everybody, to the Daily Market Review. To start off, another interesting week across financial markets. S&P 500, 5555. Finishing the day a little lower, it was small caps, Russell 2000 once again taking the lead up 1%. Breadth still looking good as well. More stocks hitting new highs than new lows. Did get a bit of a bump up in the volatility index late last week. It's coming back down a bit here at 14.7. Bond yields trading a bit more subdued. 2-year just around 450. High yield bonds still got some good price action there. Actually hitting new yearly highs today. We've still got commodities pulling back a little bit. I'll touch on crude oil a bit later. We'll also talk about the new Ethereum ETFs that just started trading on the market today. We still got inflation expectations coming down. What caught my eye today, the clear leader out of all the sectors, aerospace and defense. Thanks to good earnings from Lockheed Martin and GE Aerospace. Whole sector trading up to brand new all-time high. And it was actually energy and transports, the two weakest sectors today. Most of mega cap tech actually finished higher. However, what's really moving markets right now as I speak is Tesla. We just got earnings from them and they came in with a pretty sizable miss there. Street was expecting them to deliver 61 cents per share in earnings, actually reported 52 cents, just taking you down to a 5-minute chart after hours as I speak. Stocks off sharply about 8% and some orderly selling ever since we got the result. And so it's no real surprise that's spooking the market a little bit. Got the Nasdaq Qs off over 0.5% as I speak as well. And stick with me today because I'll come back to these charts later on in the video and I'll give you an update on how we're trading post-market here. So we've still got this rotation underway in the market with mega cap tech pulling back, small stocks, value stocks, and some other segments of the market really starting to perk up in this last week or so. We've now got UBS saying there could be a big rotation trade from cash to stocks that could push the S&P up another 17% by year end. So they said investors hold more than $6 trillion in money market funds, and naturally as rates come down, investors will be earning lower yields on those money market funds. They may seek to put some more money back into work into the equity market. And that's why UBS has a bull case scenario of the S&P hitting 6,500 by the end of year. Bank of America said there's two key metrics that will signal whether small unloved stocks will continue to beat the market. They're looking at specific levels for the 10-year Treasury yield and manufacturing PMI, with them saying Wall Street's still split on whether the rotation into small caps can last. According to the bank, the 10-year Treasury yield must remain below 4%, while the ISM Purchasing Managers Index must rise above 50 into expansion territory. And I'd agree with that. The sweet spot on the 10-year, probably just below 4%. If it really starts diving below 350 or even 370, a bit below those early year lows, that would be the bond market forecasting trouble for the US economy ahead. On the same token, if we were to rip above 460, 470, that could be the market pricing in some inflation, too hot economic growth, and that might not be a good thing either. Seeing long-dated yields push up. So I'd say we're still in that sweet spot between 450 and 380. We've also got huge structural support of the market, the corporate buyback, as a percentage of their market cap close to breaking out to all-time highs. And just looking at another measure of economic activity, the amount of imports coming into two of the busiest ports in America, Los Angeles and Long Beach, actually breaking out to highs as well. Also surprisingly, we've got consumer spending expectations over the next 3 months ticking higher as well. What consumers plan on spending on leisure and vacations. Same deal on what they expect to spend on restaurants and bars. Still a bit off those 2021 highs, but nonetheless increasing from last year. And we do have a wide dispersion in valuations looking underneath the market. Just looking at this chart here. On the vertical axis, 12-month forward PE. On the horizontal, 12-month forward return on equity. You can see tech stock richly priced, almost at a 30 forward PE, but they do have the huge return on equity to justify it. But the best cross measure comes in with energy and financials. Still the two cheapest sectors in the market. And even though we've got a bit of weakness in commodities and crude oil here, financials are perking up. I've got my eye on a few small cap financials as well. But no doubt we could be in for a bit of a bumpy ride over the coming months, going into the US presidential election. Looking back in history, the VIX will climb going into early November. Shouldn't be any surprise to see a few bump ups in volatility, and maybe we haven't seen the full extent of this pullback either. S&P could still retrace 10% this year, and that would still be well within historical norms, especially on a presidential year like this one. And another reason, we haven't even got through Q2 earnings season yet, and whilst Initial results across the board looking pretty good. One of the most important stocks, and one that's recently come back real strongly of late, Tesla, is getting knocked around here a bit. Like I said, they missed on EPS expectations big time, even though sales pretty much came in line as expected, only slightly up on the prior year, 25.5 billion versus 24.9 billion. Operating margin a lot lower than expected, 6.3 versus 8%, so they're still getting squeezed on their margins, which of course flows down to their free cash flow, coming in a lot lower than expected as well. So a big part of that is the 622 million restructuring charge as part of their layoffs. Didn't give exact numbers on Cybertruck production, but said that more than tripled quarter on quarter, which is a good sign. Musk doing his best to keep investors excited, saying he expects several thousand Optimus robots in the Tesla factory next year, saying that they're already performing tasks in their factory and they expect to have Optimus production version 1 in limited production starting early next year. But of course, Musk is known for always setting lofty targets to help motivate all of his partners to achieve them. But he did admit they are faced with more competition. That has been a big theme this year, especially coming out of China and a lot of things. They're flooding the global markets with cheap EVs. US governments try to push back on them. China's rebutted and said we're doing the world a favor, helping climate change. Nonetheless, it is hurting Tesla a little bit. Musk also confirmed that the robotaxi event has moved to October 10. That was initially forecast to come out next month in August. So that's been pushed back 2 months. Could still give investors a reason to get excited going into that event. However, like I said, for the here and now, not really liking that result, as they shouldn't. That was a pretty sizable miss on expectations. Although we're still trading above the 50-day volume-weighted average price here at 223. Currently trading post-market as I speak around 227. So we'll be watching the price action we get tomorrow, whether we get a bit of a buy the dip. And who knows, we may test $200 in the coming days as well. And if $200 can hold, then I'd say this uptrend is still likely intact, and it has broken away from mega cap tech trying to reclaim some lost ground from the start of the year. But nonetheless, we've now got 4 consecutive earnings misses, and that could very well keep some downside pressure on the stock as well. We also just got earnings from Alphabet Google coming in pretty good, surpassing forecasts, along with their capex as well. Search advertising doing good. Revenue in the second quarter up 14% over prior year. Ad sales for YouTube grew 18%. CFO said the operating margins will rise over the next year, but next quarter we'll see some pressure from depreciation and spending on AI. Continuing to reiterate their focus on AI, integrating that across all their products and business, and then now a dividend paying stock, 20 cents every quarter. Also still working its way through a huge $70 billion stock buyback program. And earnings per share just came in slightly above expectations. However, looks like they're getting a little bit caught up in this market-wide sell-off at the moment, because we initially had a pretty good response to the result, as you would expect. However, it's just pulled back a bit, trading down 2% after hours. $178 a share. Stock is still in an uptrend. Also just heard results from Spotify, coming in pretty good. Growing paid subscribers by 7 million, increasing gross margins to a new record of 29%. Stock had a good regular session, big gap up, finished the day almost 12% higher. Also just heard from Visa, another mixed result as they reported payment volume growth slowing. Still a pretty good increase on last year, $2.40 a share compared to $2, and overall their payment volume still rose by 7%. Market wasn't that impressed, even though they came in line with expectations. Stock's been sold off 3% after hours as I speak. And there's a look at GE Aerospace, coming in with a pretty sizable beat on EPS. Stock shot up again. Also helping aerospace and defense stocks today. Lockheed Martin coming in with a good beat as well, 10% on EPS. Stock trading up very strongly. Onto the global macro, treasury yields pulling back a little bit. I'd say the market already saw what happened over the weekend and had already priced it in the last week or two. Markets have really been running on a Trump trade narrative out there. Didn't really see a huge response to the Democratic coup conducted over the weekend. But I'll get more into that on a bit first. Thought it was interesting today to hear from one of the top economists, Mohamed Al-Aran, saying he's now optimistic that Western economies can break out of a rut. First time in 2 decades, the potential for a step up in growth is real and promising. Said for too long, insufficient growth has undermined economic well-being, structurally weakened increasingly fragile public finances, worsened inequality, and made it more difficult to address global threats to lives and livelihoods. Said a number of governments are now placing growth at the top of the policy agenda, illustrated most vividly by the UK government's growth mission and its urgent implementation of measures to release the brakes. He also said a refreshed US administration is likely to follow suit. He also pointed to artificial intelligence, life sciences, and sustainable energy as key driving factors for our economies, but of course pointed that the optimism is not without challenges. So I'd say that's a pretty contrarian view to say that Western economies are about to wake up and leap forward, as it's true BRICS nations have been growing their economies much faster than us here in the developed Western world. And a big part for any economy to grow is that's correlated to cheap energy. And with the new incoming US administration that is pro-US energy, oil and gas production, that should keep supply aplenty and potentially a lid on the price of crude oil as well, given the real prospect for geopolitical tensions to be dialed down come early next year. However, a lot can happen between now and then. Nothing is guaranteed. The new incoming administration is also more pro-crypto, seeing the whole US establishment actually flip on this subject this year with the approval of the Bitcoin ETFs. Now we've got Ethereum ETFs trading live on the market for the first time today. All the big Wall Street houses getting in on the action. BlackRock and Invesco, Franklin, Fidelity, Van Eyck, same ones with Bitcoin ETFs. And I think again, Gary Gensler, head of SEC, didn't want this to happen, but it looks like he's been pressured into it. Pretty successful launch. Already surpassing $1 billion in volume across all of the Ether ETFs today, but definitely a smaller market than the Bitcoin ETFs. They only did about a quarter of the volume of what the new Bitcoin ETFs did on their first day. And so a lot of people view Bitcoin as digital gold, like the number one crypto. Ethereum's a number two crypto, more focused on the actual blockchain technology and innovation, used as part of a lot of apps. But that didn't translate into higher crypto prices today. Cryptos actually fell across the board. As we've also got former Japanese crypto exchange Mt. Gox still liquidating Bitcoin, hand back to victims from that hack. There's a look at the price action in Bitcoin today, pulling back a little bit, just below $66,000 a coin, and Ethereum just holding ground above the 50-day, below 3,500. And this is the new iShares Ethereum Trust ETF from BlackRock that I'll be tracking going forward, the most liquid one. Traded almost 10 million units today, over $250 million. And there's the iShares Bitcoin Trust, IBIT, consolidating for a few months here. Also just heard China slashing their interest rate, and a surprise move to boost its slumping economy. This is coming out of their big meeting with their second quarter economic data, missing government targets and analyst expectation. They're still battling a lot of debt, weak consumer sentiment, and still making their way through a historic real estate crisis. The news we're getting from this meeting is that policymakers are focused on high quality development as the top priority. They want to achieve their growth target while focusing on managing the risks of property, local government debts, and smaller banks. And so the price action in Chinese shares been a bit soft of late as well. I'd say this is part of the fallout from the Trump trade. Expectation he could dial up tariffs on China, maybe making investors a little nervous on Chinese equities here. So we very well could break out to a new multi-month low, to wait and see. And on to the US presidential race, as I'm sure all of you saw over the weekend, and as I'd been predicting for quite a while now. In fact, my long-term friends who also watch this show will remember me predicting this back in 2020 when he somehow won the election. I just could not see him still being there in a second term, as it was obvious to a lot of us even back then. He was in neurological decline, and this is definitely one of the biggest coups in US politics, definitely the biggest I've seen in my lifetime. And it was just days ago, and for weeks, Biden was so defiant that he's not leaving the race, he's not giving up, he wants to fight Trump, he thinks he can win, along with his inner circle, and then some Democratic power brokers overthrew him. Pelosi, Schiff, billionaire donors, I would say, threatened him with the 25th Amendment, take him out of office, saying he's unfit, unless he resigned, which came about in the most strange way, having announced it on X of all places. Not on Facebook, not on Instagram, but on X, the social media network owned by Elon Musk, which the Biden administration clearly doesn't like, pretty much doesn't even acknowledge the existence of Tesla. Posted it on a plain white letter, no White House letterhead, an electronic signature that doesn't match any of his previous signatures. Appeared to catch his staffers off guard as well. They found out by X. And the last time this happened with Lyndon Johnson back in 1968, he came on, gave a presidential address from the Oval Office, letting Americans know right away what had happened. We still haven't heard from Biden himself. And so this has all the hallmarks of a coup. He's been overthrown from within. And now the self-proclaimed saviors of democracy have installed someone that hasn't even got a single vote from the American public. In fact, what you're looking at here is from Real Clear Politics. The polling numbers of the Democrats that were in the presidential race in 2019 going into 2020. And in fact, Harris was one of the first to pull out back in late 2019 because she was polling so low, 3.7%. And a lot of you remember it was Sanders jumping out in front. We all thought Bernie was going to take it. Then they did the old switcheroo. Biden came out of nowhere here in the green, and the rest, as they say, is history. So apparently Harris, who left the race early because of a lack of support, polling at 3.7%, has now somehow got the support of a lot of people. In fact, apparently, almost 900,000 grassroots donors showed up in the first 24 hours of her announcing her presidential bid. However, I'd say it's the same old suspects that we see every time, bankrolling them through all their organizations. And the mainstream media is jumping on board as well. Apparently in a new poll, Harris is neck and neck with Trump. Also, according to Reuters, Harris is actually leading Trump, 44% to 42%. We've also got MSNBC saying, of course, Kamala Harris can beat Donald Trump. We'll also be wondering now, what's going to happen with Ukraine, since Biden's had a very cozy relationship with Zelensky, as the Biden family has a long history of doing a lot of business in Ukraine. I'd say Zelensky's a little worried right now. And there has been a big change in political betting markets as well. Harris jumping up 32% in the last week, now approaching 40%. And it will be interesting to see Trump and Harris have a debate. That could change the odds. But I've got to say, this is the most diabolical US presidential election, definitely of my lifetime. And like Elon Musk says, if we really are living in a simulation, well then this season of the US presidential race certainly got to be the most entertaining for the alien. With how much was thrown at Trump, state courts trying to take him off the ballot, Supreme Court bailing him out, throwing 39 felonies at him, Supreme Court bailed him out. Americans have been told for years Biden was fine. However, they found out in the debate night, saw him in real time, what his mental state was. His odds fell through the floor, along with support. Just so happened a week later, there was a failed assassination attempt on Trump. Missed him again. Biden pulls out. A Democrat that last polled at 4% is now leading them. And now we've got the Secret Service director just resigning as well. How many more twists and turns are left in this presidential race? We're all certainly sitting here on the sidelines eating popcorn and watching. But let's just all hope this time they can decide the winner on the night of the election like a normal democracy, and we don't get the mess that we got in 2020, which really just threatens its integrity. Anyway, I'll keep you updated on that. Looking at the economic calendar today, not much out from the States. Tomorrow we're going to get some PMIs from the Eurozone and America as well. Going into Thursday, jobless claims, GDP growth data, US economy expected to have grown 1.9% quarter over quarter. Going into Friday, the big one, personal consumption expenditures, PCE, inflation data. Headline expected to have grown 2.4% year over year, month over month 0.1%. We'll see if we get another soft inflation print. And so far, not much has really changed in Fed fund futures. Still pricing in 95% chance the Fed is going to cut in September. And I'm not sure if I'd put it at 95%. I still think there's a good chance, 70-80%. But I still think there's a real possibility Jay just may wait until after the election, not wanting to be seen as political. And we may start hearing a bit more of their worries of inflation returning with Trump tariffs. Let's just wait and see what we get from them on September. And there's just an update on Tesla as I speak. Still down 7.7%, trading at 227. Taking the overall broader market down with it as well. And there's a look at the NASDAQ Qs. Trading underneath the 50-day VWAP, definitely having this pullback last 2 weeks. But look at that price action in the Russell 2000 small caps. Super strong again today, above average volume, trading up near highs. Same with micro caps, another area of the market I've got my eye on to make new investments in. Along with financials, aerospace and defense, and biotech are some sectors I'm currently looking to add some more exposure in. That's all I got for you guys today. Thanks very much for tuning in and hitting that like button, and I'll see you all again tomorrow night. Cheers.